Taxes, also known as the lifeline of society, are used to fund the government's social projects and is therefore essential to collect from the citizens. But this is not the case for those who belong to the people who belong to the wealthy class. They see this as a hindrance to their ability to grow their wealth, so they figure out ways to avoid paying their taxes. This may not be something you should consider, but if you are having difficulty catching up with the bills, then take this information as an opportunity to attain a financial advantage and save money. Without further ado, here are the top 12 ways the wealthiest people do to avoid paying their taxes. Number 12. Investing all of their money. The wealthy do not hoard cash unless it is required for a specific purpose. When paying taxes, remember this golden rule. Reinvested profit is not taxed. If your firm was set to make $5 million in profit and decided to reinvest it before the end of the fiscal year to grow it even more, you won't have to pay taxes on the $5 million. That is how businesses expand quickly. As the owner of the company, your net worth skyrockets with little or no tax to pay. Number 11. Make sure everything you use is business owned. Deduct everything is the second golden rule of tax optimization. The point is, if a business requires something to function, the money you spend is not taxable. Do you wish to buy a new car? On the other hand, the firm requires the car, so let the company purchase it at the company's expense, and you get to use it because you need it to run the business. Rich people deduct the following items. Any technology, laptops, phones, and gadgets are all required for business. Travel, hotels and flights are required for work trips, as are home office and utilities, such as the internet, as well as health insurance payments. Even eating out is a deductible expense. The more you may deduct, the less money you may have to pay in taxes. Number 10. Relocate to a tax-free place. People frequently underestimate the impact of moving somewhere where you could keep more of your money. Back in the day, this was the standard procedure. As your primary residence, you would relocate to Dubai, Monaco, the Cayman Islands, or the Bahamas. These countries do not have an income tax. They do not compel you to pay any taxes on your earnings. But there's a catch. It's usually quite expensive to relocate there, which is why the wealthy have an unfair advantage in life. Even with everything, the cost of living in Monaco is exceptionally high. Number 9. Sending your taxes overseas. This is how companies like Facebook, Google, and Apple operate. They establish businesses in Ireland because of its tax-friendly environment. These businesses have intellectual property. Every year, the US firm must pay a licensing fee to the Irish corporation to continue producing and selling products in the US. This resulted in a legitimate tax deduction for the US corporation. Through this strategy, they divert money from the US economy and send it to Ireland, where they pay merely 1% or less with further optimization. Suppose you live in a low income tax jurisdiction. In that case, you can always establish a local corporation and bill your US subsidiary for the services done, reducing your tax burden in the US. Companies like these computer behemoths would rather pay a fine than spend all of their taxes. The more you think about it, the clearer it becomes. A fine is a tax for wrongdoing. A tax is a penalty for doing the right thing. Number 8. Donate your money. The fifth tax rule is that money contributed to charity is not taxable. This is why every wealthy individual has some form of foundation. In their defense, the state has always been a lousy steward of money, so rather than handing it the money to do as it pleases, you're better off using a charity foundation to ensure your cash positively influences your community. The fascinating part is that even non-taxable foundations have deductible expenses. Things are required for them to function. You can even gift your land, automobiles, or other assets to a charity, which will still count as a charitable contribution. Being the head of that charity allows you to continue using the car you supposedly donated according to the main guidelines. Number 7. Equity over salary. Pay me in equity, as Queen Bey put it. This is done for two reasons. Equity may increase in value over time. Unless you sell it, equity is not taxable. This is how Elon Musk became so wealthy so rapidly. Elon's annual compensation ranges from $0 to $23,000. Believe it? Yes, that is how much Elon makes every year as the CEO of Tesla. Elon instead receives newly issued stock based on the company's performance. With Tesla now a public business, his net worth is growing, being the main reason he became the world's richest man. Number 6. Acquire multiple nationalities without permanent addresses. This is perhaps the shadiest and most perplexing option on this list, but countries have done it successfully worldwide. When it comes to taxes, you should pay them in your nation of residence. also known as your home country. But what if you no longer have a home country? Despite possessing properties worldwide, many highly wealthy people don't even want a home country. When institutions want proof of address, they send one from a residence they own in Thailand or Bhutan, which is written in a different language and ignored by a government that has no intention of keeping any extra information. Then some buy a large yacht and live in it full time. You're situated on a coast near Monaco one day and on foreign seas the next. Although we encourage having various nationalities to enjoy the benefits of multiple passports, we don't believe that stepping entirely off the radar is an intelligent long-term answer. Number 5. Use your money as gifts. Did you realize you may give gifts to individuals that are not taxable? Isn't it crazy? The present has a $15,000 ceiling, but if it's worth less, you do not have to notify the IRS because it is a non-taxable event. You might think, incredible. But this is a video about incredibly wealthy people and how they maximize their wealth. $15K hardly gets you into the Rolex game in terms of gifts. $15,000 may now appear to be a hefty sum, but there's more wiggle room. As of 2021, the lifetime gift exemption in the United States is restricted to $11.7 million, as long as each gift is less than $15,000. See it this way, $11.7 million in tax-free wealth is a lot of Rolex watches. Number 4. Converted to privacy coins. In terms of wealth transfers and security, cryptocurrency is altering the game. It's mind-boggling that you can put $1 billion on a stick, put it in your pocket, and fly to Singapore with it. With strongly controlled currencies such as Bitcoin and Ethereum, procedures are in place to offer transparency, link wallets to people, and ensure that everyone pays their fair amount. Profits from the sale of cryptocurrencies are only taxed at 10% in most countries, providing a better return than certain other assets when the industry price appreciation is included. Bitcoin is entirely legal and here to stay, but there's more to it than that. Because of the rise of blockchains, a new breed of technical currencies known as privacy coins has emerged, which can be exchanged, stored, and transferred fully anonymously. Privacy coins are not unlawful, although their legality varies by country. Monero, Dash, and Zcash are the most well known. The assumption is that once you earn money legitimately, you should be able to spend it without other parties scrutinizing your transactions. Number 3. File for bankruptcy. Declaring bankruptcy is costly, time-consuming, and confusing unless you're incredibly wealthy and find ways to prevent it. This is how the procedure works. Assume you're a good lawyer who earns $250K each year. You own a $1 million home and have saved another $1 million. You want to start a business and decide to purchase a $10 million office property since it will make you a lot of money. You go to a bank, put down $1 million, and get a loan for $9 million to buy the office building. A pandemic strikes a year later and all your tenants flee. You're still owed $9 million by the bank. To complicate things further, the building you recently purchased is only worth $5 million because no one wants to buy an office building. Our attorney can now declare bankruptcy because the office space is owned by a corporation. Although they will take away his office building and he'll have a difficult time ever working with the bank again, foreclosure regulations prevent the bank from taking away his residence or stealing his earnings. This is the distinction between being impoverished and being bankrupt. Rich people can go broke, meaning their net worth may be zero or even negative on paper, but they can never be destitute. Also, assuming you didn't need the bank and paid everything out in cash, the loss of money would still be tax deductible, which means you did not have to pay taxes on your income for many years until you make money on the deal you lost. Number 2. Treating your yacht as a second house. Here's an intriguing tax observation. Governments adore homeowners and loathe the wealthy who like to splurge. They really want to tax these show-offs. Hashtag tax the rich, which is currently trending all over the internet. So, what do the wealthy do to combat this? They claim their yachts as second homes to achieve lower tax rates. At the end of the day, it's true. They use it as a vacation property when visiting Mykonos during the summer. The IRS considers a boat a second residence if it provides sleeping, cooking, and toilet facilities. Motorhomes can also be used in this manner, but how many super rich people buy motorhomes in the first place? And last but not the least, using trust funds to avoid real estate taxes. A hilarious saying among the wealthy goes like this: A guy doesn't realize how much he has to be thankful for until he has to pay taxes on it. Unless you're wealthy, you're probably aware that if you're rich and die, the state taxes up to 45% of the fortune you intend to leave to your children. It's also known as an estate tax. In addition, here's a crucial fact. In the United States, you're considered wealthy if your net worth exceeds $11.7 million. There is no estate tax or is significantly reduced for somebody worth less than that. To the typical person, $11.7 million may seem like a lot of money, but we're living in the world of billionaires, and we're likely to see our first trillionaire in our lifetime. With the current inflation rate, everyone will become a millionaire sooner or later. Rich people use trusts to structure their money to protect the state from taxing it away. If you put something in a trust, it no longer belongs to you unless specific requirements are met. Therefore, you can't pass it down to your children. When a property is placed in a trust, it is no longer considered part of anyone's estate for inheritance tax purposes. It also safeguards you from putting all of your fortunes in your child's name, because they might simply blow around if they decided to, so control remains with you while you're living. You can even set up intelligent contract-like regulations so that your children can gradually access the trust assets as they reach key milestones, such as turning 25 or graduating from college. Before we end today's video, we've got some bonus information for you. Did you know that because of inefficiencies, taxes are high? While everyone wants to pay their fair part, the issue emerges in the administration of those taxes and the disparity in how much each person should pay. You don't want to pay taxes if your government isn't doing anything to help you. This is one of the reasons why Swiss citizens are content with the high levels of taxes they pay. Their government does what a government should do with its contributions. Education is free and of high quality, hospitals are accessible, the environment is clean and flourishing, and the general populace is content. In comparison, consider how much corrupt governments waste your money. Bribes, roads, and a rotten system. Everything breaks your spirit because you feel like you're being used. Why can't we choose where our money goes through an app on our screen in 2021 when we have incredible technology at our disposal? Of course, some of it must go to the military, security, and healthcare. But where do most of it go? Why can't you choose to send your resources to a local school or to repair the roads in your city? This is why we believe blockchain will have profound social impact. It eliminates the need for third parties to make decisions for you. A smart contract might be constructed in which a little percentage of your income is automatically given to the causes you care about, with complete transparency and control. What percentage of your government's budget is spent on waste? How many individuals work solely to transport papers from one office to the next? We're looking forward to everything becoming automated. More than politicians, we require leaders and transparent technology, and governments are vulnerable to change. We can't wait for the system to be fully streamlined because how we pay our taxes will alter this decade. And that's it for today. Thank you for watching today's video. Please do leave a comment and like, share, subscribe to this video. See you at the next one.